Through the years, accounting itself has not really changed all that much, but the way and the process and methods that we do it has changed. Today, there are two main ways in which accounting is done, but it's mostly up to the business and which ways they choose to do it, but there are ones that are definitely better than others. The question that some accountants have is cash basis the best way to do accounting, or is accrual basis the best way to do accounting? This is an important issue for businesses because choosing the right method could lead to different benefits, such as tax breaks and cheaper costs to do the accounting itself. It is also required that you do one of these specific methods because you are taxed by the government as well as the state, and they need a consistent way that you reported your information. That means you cannot just choose to do neither of them. And while choosing between the methods could seem like not a very important decision to some accountants, it can be the difference between a business that succeeds or one that doesn't last past the first year. Before we delve into the question, it is important to understand some of the basic history behind accounting. It's unlikely we'll ever know exactly where and when it started, because it was probably done by the very first humans, but the very basic reasoning to do accounting has not changed. What they would do back then is they would count what they had, whether that be animal furs or food or building supplies. And now we do the same, it's just we count different things. This could be money or sales or profit, but nowadays it is usually based around money, when back then by the first humans they probably really didn't have any form of currency. And even with that, the ultimate goal now and back then was still to maximize profit. And while the goal is the same, the process has evolved and has become a lot more complicated through the years. One of the first popular methods for accounting is cash basis, and it is how it sounds. It revolves around the physical exchange of cash. And that physical exchange of cash from customer to the business is what creates the entry that will go into the books. There are a few notable pros to the cash basis accounting. First and foremost, and the one that is noticed by a lot of people first, is the simplicity of cash basis accounting. It's simple because it eliminates the need for outstanding debits and credits. Outstanding debits and credits are credits or debits that have yet to be collected, but they are out there, so somebody owes you money, but they have not paid it yet. Since cash basis only records once cash has been received, there is never any need to record a debit or credit as outstanding. It also is very simple because it uses a single entry system, and the single entry system is a system where only one account, which usually is cash in this case, is recorded when a transaction has occurred. It is also cheaper. It's cheaper because a business won't have to hire an accountant, and that could be very costly. The reason they don't have to hire an accountant goes back to the fact that it is very simple, and a normal businessman should be able to figure that system of accounting out themselves, as in college they'll have had to have taken at least a couple accounting classes, and that will be enough information to know how to do the accounting, as most of it would just be simple adding and subtracting. If they did want to hire somebody, they could hire somebody like right out of high school or right out of college. They really didn't have to pay that much. It also helps with the cash flow statement. And what the cash flow statement does is it says where exactly your money went and where it came from. Usually this is done at the end of the period in which the cash transactions have occurred. But with cash basis, it can happen really whenever because they know exactly where the money is coming from and where it is going as it happens. Cash basis does have a few cons as well. As you will notice, the simplicity of it works both as a pro and a con. It is so simple that it really doesn't give enough information to the business. It uses a single entry system that I've mentioned before, which is much inferior to the double entry system, which I will discuss more later. It is also very deceptive, which goes along with the simplicity of it. It will put a lot more emphasis on the short term than it will on the long term, which most businesses are looking for the long term. An example would be if a company records $500 in sales, but doesn't receive any of that sales in that period, but then a cash basis company who wouldn't have recorded that receives $250. They'll record $250, so it'll appear as if they had a $250 gain over the other system, but when really that company has sold $500 as opposed to only the $250 that the other one has sold. It is also very restrictive. The IRS itself does not allow certain businesses to use the cash basis method. This usually is if a business is either too small or if a business holds some sort of inventory, then they are not allowed to use this method. The next method is accrual basis accounting. In this method of accounting, transactions are recorded as they occur, whether or not any sort of money has been exchanged or not. This system will create debits and credits that have not been paid yet, or outstanding credits, like I mentioned before. There is only one pro that's note the wording of the accrual basis method, but it is so important, and that is that the accrual basis allows for different financial statements that are a lot more accurate than the cash basis method. They are more accurate mostly because of the double entry system, which will record cash as one account and usually another account in which the transaction affects. This helps put a bigger emphasis on the long-term health of the company rather than the short-term that cash basis does. There are a few cons to the accrual basis method. The first con is that it does involve some guesswork. This is because there is an account called uncollectible accounts, and when you get sales but don't receive cash right away, there is a chance that the customer will never pay you. So the guesswork is at the beginning of the period, usually the company will take a percentage of the sales and multiply that by their total projected sales, which would get them an estimate of the amount that they will not receive. And this amount will not be correct to a T every single time. So at the end of the period, once they figure out what their sales were and what the amount they didn't collect was, they can change it. The second disadvantage of accrual basis method is that it is more expensive and you will have to hire an actual accountant, as it does take a lot more time, but it does take a lot more time because it is much more useful as a company. Overall, the method that a company will use will depend on their size and their preference. As I mentioned before, the IRS will limit under certain circumstances which method you need to use. But other than that, it's really up to the company. Most accountants would recommend that you use accrual basis method because of the long-term health as well as just better financial statements in general. For what I would choose, I would tend to agree with those accountants, as the long-term health of the company usually will yield better results than just looking at the short-term health of it.